Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the commodities space, so the dollar still has not found a daily high or low at this point. Every single day is a little lower high and lower low. So we're looking for a higher low to form compared to 97.17. The 4-hour RSI is just getting down towards oversold, and we have to see a change in the 4-hour trend if we are going to have confidence that our daily high or low is established. So at this point, the size of this pullback indicates that the most likely scenario is a tightening range, where we will look to find a higher low sometime early this coming week, and then a bounce for a lower high. And that's what I'm always looking to determine when we see a breakout or a breakdown. Is it a continuation move or is it a tightening range kind of move? If the pullback only lasted 2 days, that would favor the potential for continuation. But the more you pull back within a range and the greater the percentage distance needed to set back to a higher high, that increases the odds that a tightening range is the most likely scenario. So for the dollar, that's what I feel is the most likely scenario. Looking at gold, we've had a significant pullback in precious metals due to the market strength, in my opinion. And Powell speaking on Friday added a little bit of downside pressure again, but the majority of the weakness came when the S&P 500 broke bullish from the monthly range we've been watching on the August bounce attempt. So we have lost the daily uptrend on gold, which means zoom out and look for weekly consolidation. We're going to be watching the weekly exponential moving average as a potential visual guide, and that's going to be in the 1460s this coming week. And the daily time frame is not giving us any indication of a shift in momentum at this point. 1492 after 1500 psychological is the most clear support level, and we will have to see a 4-hour trend change back to the bulls in order for our daily higher low to be established. So right now, 1502 was our low. We saw a solid bull move, but it was just looking for a 4-hour lower high. And now the question is, can the bulls hold the low of Friday? And if not, it's a setback, and we are that much further away from a 4-hour trend change taking place. So bear miners have seen a nice end of the week here. We'll look at those in just a second. Silver with its significant pullback, again, still in a daily uptrend. I would consider anything above 1692 as a daily higher low. And if we zoom out to the weekly chart, big upper wicket profit taking, volume climax. That's our highest volume week in months. So very notable that our temporary top is extremely likely set. Anything on the weekly for silver above 1590 is a higher low. So the bulls have tons of space to work with. But again, size of the pullback is significant at this point. And just like what I talked about with the dollar, the odds of a continuation move compared to a tightening range is less likely. So every consolidation period we've seen in the last few months that has led to continuation, has anything looked like these 2 days? No, the pullbacks have all been much smaller, much less bear volume. So I do believe that when we find a bottom, a temporary bottom, I believe that it will result in the bottom being set and then a bounce to a lower high and then a tightening range. So I'm going to be looking for potential bull entries on precious metals and on bull miners this coming week. Looking at the 4-hour time frame for silver, that 4-hour RSI getting oversold for the first time after this massive bull run is definitely catching my attention. So again, have to change the 4-hour trend, which we already dropped to a lower high and lower low. Anything under 1878 is just a lower high, keeping this downtrend intact. But if we see weakness first thing this coming week, and if that 4-hour RSI is oversold, I personally will be looking bullish for positions. NUGT, big 2-day drop closing at the low. 3251 is the next clear support level. We have lost the daily higher lows. We zoom out. The weekly higher low is 3251, so that support level is important. 4-hour RSI getting close to oversold. Hourly RSI also oversold. This is a scenario where I jumped online Friday afternoon heading into the close, and I said, wow, gold's beat up, miners are beat up. I wouldn't be surprised to see a bounce. Should I get a position of NUGT at 35 and hold over the weekend? And then I thought about it for 3 seconds and I thought, no, that would be gambling. Why would I expose myself to entering a position in a miner where I'm not going to be able to trade that miner until 7 a.m. Eastern on Monday, and the precious metals are going to start trading Sunday night? and that's going to be trading of what, a dozen hours in the commodity before I could even do anything. That's handcuffing myself, and it's exposing myself to potential further larger losses than I would allow myself to take in regular trading, because obviously my stop loss is going to be no good when the market is closed. So that was just a little bit of psychology that went through my head. And again, maybe we are green Sunday night into Monday morning, and maybe the bull miners do open higher, but that doesn't mean I should say, oh, well, next time I should do that, because again, I want to enter trades that are high probability in my favor, that stop losses are very clearly defined, and if I can do that, I can position myself to do this long term with longevity. If I am guessing on earning reports, and if I'm guessing on Fed FOMC reactions, and on inventory reports in commodities, and on over weekend moves, I'm gambling a lot more than I'm keeping the odds in my favor, and I'm putting myself at a disadvantage unless you're trading futures to have the ability to enter and exit as you please. Looking at the bear miners, one thing I want to talk about here is this volume chart. You might look at this chart and say, wow, volume's huge. That means it's a bottom. In some cases, yes, but also just want to point out the fact that if you're trading 11 million shares at $12 and you're trading 22 million shares at $6, that's the same dollar volume. So dollar volume is what matters, not the number of shares, because that can be a little bit misleading. You would look at this volume bar, and let's just look at the example right here. This candlestick right here, pretty much the same dollar volume on the size of this candle with the size of this volume candle. And it looks twice as large because it is, because that price is half as much. So a break of the lower highs on the daily on dust, and 820 is the most important resistance level, keeping in mind that these leveraged ETFs do have time decay. So we will see, GDX, which doesn't have time decay, would likely break its key support from August 19th before the bear miners would break the resistance from August 19th. So just be aware of that fact. But closing at the high of the day, little bit overextended. We'll look for a healthy hourly higher low compared to 627 to form at some point on Monday. And at this point, I personally would not be looking for entries into these bear miners. If I am looking for an entry in a bear miner, it would be on a short-term bounce in the precious metals and in the bull miners to cool off those 4-hour RSI levels a bit. But a little bit of a shift. Just looking for a weekly lower high. I would say that anything under 820, well, actually, the most important resistance is 1009. I would say anything under 1009 on the weekly is just a lower high. So nice short-term move, but let's not lose sight of the longer-term trends on the weekly time frame. Oil, nice save by the bulls. We pulled back with a long lower wick, so buying the dip on Friday. Most important support level for me is 52.82. Is this our daily high or low? Depends on the 4-hour trend. Has it changed? And the answer is no. We need a 4-hour higher low and higher high to clearly say that the 4-hour trend has changed and our daily higher low has been established. Resistance is 57.72, and the bulls have to get over that level convincingly, because the last time we broke all these resistances on Thursday, it certainly was not convincing, and there was a lot of profit taking behind it. So the question now is, will the oil bulls break their tightening weekly range from the last 11 months? Can they break it bullish to try and follow the S&P 500's bull break, as the S&P 500 is close to the all-time high, while oil is still fairly range-bound in this current channel? And we will be looking for oil to give us a clear break probably sometime this month, but certainly doesn't have to be. And definitely worth paying attention to. Natural gas right up to 250. Huge follow through. Congrats to the natural gas bulls. They did not slow down, where natural gas at this point has gone 17% without seeing any daily consolidation. So if we cannot break 250, we're looking at the 4-hour uptrend. Anything above 240 is a 4-hour high or low. We would have to lose the 4-hour uptrend, fail to break 250, and then we would look for a daily high or low to form. And I would imagine there's a lot of bulls that would be looking to buy that daily high or low to try and get in for that 250 bull break, which would be the break of the weekly lower high resistances that have been intact for almost a year at this point, about 10, 11 months. So short-term bulls in full control. Again, not liking any bullish entries up here. Need to cool off a bit and see a daily higher low form if I were to be comfortable making bullish entries at this point. So that's where we stand as we head into this coming week. Fed FOMC will have significant impact on the dollar, the miners, and the metals in a week from Wednesday. And other than that, let's see if the bull miners and precious metal bulls show up early this week, as we are going to be keeping an eye out. Thanks again. Have a good weekend. We'll end it here with some Iceland, and I'll see you next time.